Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, November 14th. We have got a fantastic show lined up for you today. First up, I am talking to Parag Agrawal, former CEO of Twitter and now founder and CEO of AI infrastructure startup Parallel Web Systems. I'm excited for that conversation. We're then talking to the founder of an NVIDIA challenger, D-Matrix, about how they plan to compete with NVIDIA. And we're then bringing on our Deputy Bureau Chief of Finance, Cory Weinberg, to talk about his feature story on Grindr and its escalating boardroom battle. And last but not least, we are debuting a new segment today called The Editor's Cut. Each week, a rotating group of senior editors from The Information will join me to take you inside their edit meetings, helping us understand what the big questions are facing specific pockets of the tech sector. Today, we are talking about autonomous vehicles, which promises to be an exciting discussion. I'm very excited. It's a very big show, and so let's get right on into things. One of the big questions surrounding AI agents is how they will be able to pull the most up-to-date information from all around the internet. Parag Agrawal, the former CEO of Twitter, is tackling that exact question with a new company he founded 2 years ago called Parallel Web Systems. The company this week announced it raised $100 million at a $740 million valuation, and I want to bring on to Parag to talk all about it. Parag, welcome to TITV. It's great to have you here.
Thanks for having me.
This is going to be a fun discussion. I'm really excited about this. I want to start with what your company does. And where I actually want to start the discussion is when I go to the Parallel website, I see a little toggle at the bottom that says, are you human or are you a machine? And I was playing with that toggle this morning. And I want you to tell us a little bit about how that toggle relates to what you're building at Parallel.
Well, the web, as we all experience it, we use it. We do it in browsers, we do it in apps. It's been built for humans. When you think about publishing on the web, what do you think about? You think about, okay, how will people come to my website? How will people find it? How will people navigate through it? What actions will they take? Increasingly, it's actually going to be AIs that use the web. When we started the company, the motivation was that it was clear what the future would be. AIs would use the web a lot more than humans ever have. And so now, the web has to evolve for its new customer, AIs. And our company's name is Parallel Web Systems. A parallel web built for AIs is how we view the world. We publish our website for humans and also for AIs. And it's a nod to what we see the future will be for all websites.
Right. So, okay, so you see that being the future of the internet. Now talk to me about what the actual products are that you're developing at Parallel.
At Parallel, the products we're building allow anyone building an AI agent to search and access the web. So if you think about any work that happens that you might do in your browser on the web. Now, let's say we build an AI agent to help you in whatever work you're doing. That agent must have a collection of tools to be able to do that work. Now, one approach is to give the agent the exact same tools that we humans have been using and let it go use them, and people do that too. We believe that the web is a interesting enough, hard enough, big enough problem that it's worth making a tool which is optimizing for AIs. And as much as all of us think that AIs are very similar to humans because they sound like us when we chat with them, they're not. They're limited by context windows. We need to put high signal, amazing information in front of them. So we're building tools optimizing for AI to be able to more effectively use the web.
And so in terms of your primary customer group, are you selling this tool to companies that are building AI agents to sort of help them access the web better? Or is this a tool that can actually be used by website publishers to help them optimize their own websites for the AI agents that will be crawling their websites?
Our primary products today are for people building AI agents so that they can access the web. In order to do so, we build, if you might, a search engine for AI agents, which allows them to search the web, or we allow them to pull content from the web. Our customers end up being all kinds of AI agents in all kinds of spaces. So if you think about the space that everyone talks about all the time, coding agents occasionally need to go look up documentation, or they need to search the web to figure out when they get stuck and how to go beyond that, or to pull data. You think about someone building a finance agent. You think about someone building an agent for insurance or risk. You think about someone building an agent for a consultant or for a lawyer. And you look through all of these disciplines, even people doing like scientific research agents, they all need the web because all of these jobs need the web. So these agents now use our tools and our technologies in order to do work.
To access the web better and more accurately.
Yes.
How do you deal with the issue of paywalls, for example? We are our website. We are known to have a paywall that it's pretty hard to get around. You have to subscribe. But how do you deal with all the information that sits behind paywalls? I'm thinking of news publishers, but there's also other websites that have this.
Yeah, we currently do not go behind paywalls. We only access the open web. So content that can be accessed without paying, content that can be accessed without logging in. And so your paywall, your content isn't available to AI agents. One of the reasons we started the company is to incentivize the web to remain open. The open is a miracle. And I think it'll require some real business model innovation to incentivize you all to publish content in a way that you want AI agents to access it. And it's possible because AI agents can generate a lot of value. If we figure out a way for them to share that value with people creating amazing content, because that content is really valuable to the AI agent's customer, then you will have incentives to allow AI agents through our system to access all of your great content. Because ultimately, you are going to go through an AI agent to get to your customer.
Right. So that's the challenge at hand. What is the solution? How will you incentivize publishers to do that?
The solution will come soon. We don't have a solution to announce today, but let me tell you why.
Working on it. You're working on it.
We are working on it. There are hints at a solution on our website. Whether you look at the human version or the machine version, there's an about page on there. But I'll give you the broad contours. The broad contours are, our thesis is AI agents will add a lot of value. When you add a lot of value, we also believe data published on the web is really fundamental. And there's some really high quality data that is really important. Now you combine intelligence with high quality data from multiple sources, and we believe the whole is much bigger than the sum of parts. Now, if you create a large amount of value through bringing things together, and then if you can figure out how to share this bigger pie you created, then you can create incentives for collaboration. Now, at parallel, what we're working on is figuring out what are scalable ways of creating these incentives for people to keep their information, to keep their data open, and welcome AI agents instead of block them.
Now, I do want to go back to the incentives thing, because this is something we've talked about on this show, is what is the right format for these incentives, for these deals that companies strike with publishers. We've seen a shift in a flat fee model towards more of a usage-based model, depending on how much you actually access the data. How are you thinking about, is usage-based the direction that you are thinking of taking your own line of products? How do you think is the right way to structure these licensing deals?
I think it's much more akin to how much value this data provides, which has to look into not just was it looked at, it is the unique value of some data. Is it a very unique data point versus one of 100 ways you could have accessed this information? And so a lot of factors have to go into understanding how a certain piece of information or data or a publisher or a website must be valued. And that's some of the research we've been doing, and it's looking very promising.
I want to ask you sort of about the AI agents landscape at large. There are so many agents. Every enterprise software company, the public, the private ones, everyone has their own agents. And we've talked on this show about how the agents are overlapping with each other, certainly with the public software companies too. I mean, we actually had a great table that we published in a story this week about, it was a matrix between all the enterprise software companies and all the different types of agents that they could offer. And we colored in the boxes to show where each player is playing. And newsflash, everyone's playing everywhere. You know, there's a lot of overlap. How do you see this story playing out 3-4 years from now in a world where all these companies are offering products that very much step on each other's toes in a ways they haven't for the past 5 years?
Well, I think competition is a wonderful thing. Um, People building, it's very clear that there is a real opportunity here. There are a lot of problems to be solved, and we now have technology which can solve those problems. In our view, it will come down to AI agents delivering reliable, high quality work. The reason at Parallel we've focused so much in all of our technology, all of our products, we sell it on one thing and one thing alone, which is quality. If you get accurate answers and if you get work done at high quality and higher quality than anyone else, then you have the right to win.
Hmm.
And we believe that everyone is going to go try to keep improving their systems and improving their quality. And I think ultimately, when things settle down, the highest quality solutions will prevail.
So the highest quality solutions prevail. Do you see there being some kind of a shakeout 3-4 years from now? Do you see there being consolidation between some of these big enterprise software companies? We go from the Bessemer Cloud 100 to the Bessemer Cloud 30. How do you see this shaking out?
No, I think it actually goes in both directions. So there is going to be some amount of consolidation, but there's also going to be a large amount of new bespoke software created. Now, if you look at how easy it is to build personal applications or applications specific to a department within a company, that's also happening, right? The ability to customize software instead of all of us using exactly the same custom software is also increasing. So what we expect is actually much software that works for you. And now, at the top end, there is going to be some consolidation, but broadly, there are going to be more personal pieces of software that we will have access to. And we will not just choose from a desk, from a shelf. Instead, pick up ingredients and make our own. That's part of why our product is an API for people to be able to compose and build and fit into whatever their workflow is.
I want to ask you very quickly about the old world that you came from. You spent more than a decade at Twitter, and I read that you still call it Twitter. You don't call it X.
Go both ways.
Go both ways. Okay. What I want to ask you is you seem to be using the platform still a lot. I wonder how your experience at that company, you spent over a decade there, certainly, in the senior most position of that company. How did your experience at that company over the years inform the way that you're building Parallel?
I also spent my time as the most junior software engineer.
But I have to tell you, that's not listed on your LinkedIn. Your LinkedIn has 3 titles: Distinguished Software Engineer, CTO, and CEO. So I don't know.
I think I should fix that. I think your experience do shape you, right? I think the big thing you have to learn from an experience like that in building a company like this is which part of that experience to bring to a new context versus not. Now, Twitter was, when I joined it, a rocket ship on the consumer side. We could not roll in servers fast enough into data centers to keep the site up. Now, that is a very different context to work in than a pre-product market fit company when I started Parallel 2 years ago. And at Twitter, through the pandemic, Twitter was a remote-friendly environment. Parallel started religiously in person, 5 days a week with the small team, because you need extreme velocity, agility, and it's really fundamental the first year or two in figuring out what the customer wants, what the technology is, and you need to switch directions every other week. And so instead of saying we'll take how we used to do things in a place and bringing it to a new place, you look from first principles. In fact, if you think about how we think at Parallel, it's informed by, at Twitter, when I built products, I would imagine a human on a phone opening up the Twitter app and what their experience was and try to explain every piece of technology we built to serve that moment and that customer, right? Now, we're like, okay, as a result of that, we learned these patterns of building distributed systems or how we build things. Turns out, if you think first principles and said, okay, the human is no longer the customer. It's actually an AI agent that's our customer. how would we build that technology differently, and where will the biggest differences lie, and let's go innovate there. So you don't apply what you did there. You, in fact, question that what might be inbuilt assumptions in your mind as a result of having done that for 30 years now.
So in some ways, you're building basically something that is somewhat opposite to what you built at Twitter, which is at Twitter you were building for people. In this world, you're building for everyone but people.
Exactly. And I think that's the whole premise of the company, that the customer for the internet, for the open web, is changing. It's been built for humans as customers, and now it's going to be AIs. So what do you do differently?
Can I ask you, which do you find more fulfilling? Because on a human level, building something for people and then building something for machines, look, my opinion, I would prefer to build for people, right? And I know you can make the argument that it's people at the end of the day who are using the agents and it's built to benefit them. But I mean, did you like building for people at all a little more than building for machines?
I love building for people. And when you build for machines, you are building for people. If I take for granted that AI serve humans, I don't question that. I believe that to be true. So you are ultimately building for people. I do find it more exciting in this moment to be building for machines. Because I believe the scale of how machines will use information, be able to aggregate information from different places, put connections together, find patterns, and drive insights, innovation, knowledge creation is going to accelerate. So by building for people, the amount of impact you get to have, the amount of value you get to create for people is higher. And that's what's exciting about building for machines.
Right. Last question for you before I let you go. With your experience from the social media world, I think you're the perfect person to ask this question to, which is that in the era of AI, now we have the advent of AI-generated content. This is video, this is text, this is images. And look, every dinner that I go to, the topic is that we are going to live in a world where we are going to see more of this content. It's going to flood our social media feeds in a way that we can't even imagine. And there are some concerns with that, obviously, right? It's the question of, well, how do you know what's real? How do you know what's right? How do you know what's verified? Does that concern you at all? The way that the content creation ecosystem could go in this future that people are painting?
There are going to be challenges, certainly, as content creation is easier. I do believe these are all surmountable challenges. I think we went from everyone being able to publish on the web through blogs, and by creating their own websites, there was some friction to there. Social media enabled everyone to publish with no friction. It created challenges that we had to grapple with, and we continue to grapple with. And there is a huge continuum from only publishers who had access to publishing companies being able to publish and distribute content way back when, to now everyone can publish on social media, and now the friction is even lower. Content that looks and appears high quality, and it requires a little bit more to figure out what is actually high quality, right? So but we also have the tools to now solve for those challenges, and there are always going to be. It's always a battle to adapt, right? I think you're going to see a bunch of AI slop around, and it'll be really worth the smartest people's mind to figure out how to have the highest quality content, the best content that people actually want and care about, shine.
And double click on those tools that you talked about. What in your mind is working? What is the solution that we should be developing to combat this challenge?
I think some of these solutions end up being technology, and some of these solutions end up being societal, and the best ones end up combining the two. So we'll establish cultural norms. We will establish tools and technologies we use. People will establish ranking systems and how they incentivize content. People will establish reputation and brands. And you might go out there and you might say that we only create content this way. And if people trust that, you will win. On the other hand, someone else will go out there and take a different strategy. And if they're able to produce extremely high quality content using AIs and gain the trust of people on the other side and get distribution, they will win. And so I do believe that, like, I'm a big believer in free markets. I'm a big believer in us being able to solve these problems together. It will not be a linear path. But I think even our technology, we build search rankers, systems to try to figure out what's the highest quality content. We run into this challenge every day. We don't solve it perfectly. But there are many things we can do in order to help our customers get the highest quality, original, reliable, accurate information from the web, which is relevant to the question at hand.
Right. So algorithms to combat algorithms, in short. Well, thank you, Parag, for coming on. It's a great conversation, and I really appreciate you joining us. And I know you're early in your product development, and so as you release more and more products, please do come back on the show and tell us more about what you're building. We appreciate you coming on.
Thanks for having me.
Of course. Parag Agrawal. Okay. Another NVIDIA challenger is picking up steam and raising new funds for its rival chip. D-Matrix announced this week it has raised $275 million at a $2 billion valuation. The company says its technology is 10 times faster, 3 times cheaper, and 3 to 5 times more energy efficient than GPU-based systems. Joining me now is Sid Sheth, the CEO of the company. Sid, welcome to the show. It's great to have you here.
Hey, Akash, how are you? Pleasure to
I'm doing well. Let's talk chips. How about that?
People love it. I can talk it 24/7.
Well, I trust you're pretty good at it because you just raised a lot of money. And so clearly some folks believe in the way that you talk about it. Tell me, why is D-Matrix's chip better than NVIDIA's? I talked about the stats up front. Okay,
Yeah.
You talk about faster, more cost efficient, it's cheaper. How are you doing this?
Yeah. So I think let's peel the onion on that a little bit, right? And let's take a step back. So first of all, D-Matrix is focused on inference, right? We don't focus on training, which is the other piece of AI computing, which NVIDIA GPUs are extremely good at, right? When we started the company in 2019, we had a singular mission: focus on the other piece, which was inference, where AI actually gets deployed, where monetization of AI happens, decisions get made, productivity is unleashed. And back in 2019, I'll be honest, when I would visit investors and talk to them about inference, it was a word that most people didn't even understand, right? It was like, what is inference? And now, post ChatGPT, post DeepSeek, the whole world is talking about inference. How do we make inference available to all of humanity? Every human on the planet wants to use compute for inference specifically. Very few people want to train models, but everybody wants to use AI and use inference, right? So it's not really a one-size-fits-all problem. It is not like you can build one chip that serves all of humanity's needs for inference, right? So you really need something that is different strokes for different folks. And when we talk about how we are better at GPUs at certain types of workloads, certain types of applications, the 10x, faster, 3x, energy efficient, 3x cost efficient. Again, the whole premise of the platform that we built at D-Matrix was around optimizing for efficiency. And when we talk about efficiency, it's about doing more with less, right? And what are the 3 most critical resources that humankind cares about? Well, it's time, it's energy, and it's money, right? So if you find a way to do more compute, more inferencing compute with less time, with less dollars, with less energy, that would be a clear win. Now, we also realized that we really can't do this for every single application out there, right? Because the GPU today is a more general purpose acceleration engine. What we were building is a more dedicated accelerator for inference, and we started our journey with a focus on what we call specific applications that run on smaller language models. That's what we are focused on today. And
so it's really narrowing in on a specific application.
That's right. What we are hearing from most customers is like, look, most applications, enterprise applications today run on these smaller sub 100 billion parameter models, call it, right? The frontier models that are, call it trillion parameter models, more, suited for AGI, right? More general purpose AI. So there is going to be a segment of companies that chase AGI frontier models. That is not what D-Matrix is focused on. We are really focused on the enterprise class smaller models.
Let me ask you this. So where is the product at now in its development? Have you finished the development of a chip? Have you sold the chip to customers?
Yes. All of the above. The product is in customers' hands. They are testing the product. It's being piloted.
Okay, this is the Corsair chip is the flagship chip you have. So you've sold the Corsair chip to customers. Who's using it?
Well, it's a combination. So I think our target customers are hyperscalers, neo clouds, AI clouds, sovereign clouds. So we have customers across the board. Right now, we have more customers than we can handle. So we're just really trying to pace this.
Okay.
Chip deployments take time, right? This is not like you throw something over the fence and the customer can take it and run with it.
Right.
From the time we give our chip to a customer, it takes them another 12 months to really deploy it in production, right? And there's a lot of support and handholding that we have to do.
Right.
So we really have to make sure that we can only chew as much as we can digest, right?
You guys are using TSMC to make the chip?
That's right. We use TSMC to make all our chips.
How hard is it to get TSMC to actually make the chip? We've talked to chip companies in the past. Look, capacity is an issue. I mean, everyone wants to use TSMC. There's only a couple players in the world that can actually make it. Any challenges actually getting or finding capacity from their end to make the chip for you?
So we first of all, capacity is a constraint right now for the leading edge process nodes, right? So if you're building a chip on the latest and greatest process technology, the stuff that NVIDIA uses, Apple uses, and other larger semiconductor companies use, absolutely, there is a shortage, right? But at D-Matrix, the way we built our platform, we built it in a way where the architecture did not really need to take advantage of the latest and greatest process node, right? So we are typically N-1, maybe N-2 generations in terms of process technology behind what the leading edge semiconductor companies use, right? Because our architectural advantages will more than make up for the lag in process technology. That's number one. Number two, we don't use things like HBM memory, which is very, very popular with GPUs, right? We use other forms of memory technology. We don't use this thing called silicon interposers and CoWoS, which is again in extreme shortage and short supply. So we have built the platform. The computing platform has been built with technology that does not really use any of the technology that are in short supply today.
Got it. So you've sort of optimized around it. I wonder, you've just finished this funding round.
Mm-hmm.
How hard is it to find venture capitalists in this era that actually know chips really well? I can't imagine that every flagship venture firm has the expertise to really know what it takes to make a chip, right?
It's a handful, Akash. It's really, I can count them on my fingers. I've been doing this for 7 years. There's not been a week in the last 7 years I haven't pitched to an investor. And I can tell you it's a handful of investors who really can diligence deals.
So there are some firms that say, I like, it's just not our space. We don't know it. It's important. We don't know it.
Many of them don't go there. Some of them want to go there because of all the, there's just so much noise around chips and, with what's happening with NVIDIA. Many of them want to go there, they want to participate, but they just can't pick the winners from the losers, right? It's very, very hard for them to do that.
Right. And last question for you, talking about the winners versus the losers. Look, you are taking on Jensen Huang. There's no two ways about it. I know that it's a very specific application. How do you wake up when you wake up in the morning on a personal level? I mean, what does that feel like to be taking on perhaps the most powerful person in AI right now? Does it not scare you? Does it inspire you? Just walk me through your personal thinking.
No, I've been in the industry for 30 plus years, right? And, I started my career at Intel, when Intel was at the top of the world, right? And everybody was taking on Intel. Then I've been at 3 startups. This is my 3rd time building a business. I've competed with large companies. I've competed with small companies. I've competed with very strong incumbents, right? So I don't think it scares me. It's certainly, there is an element of inspiration. I do look at how larger companies have gone on to get the moats and the advantages that they have, because I've followed journeys very, very carefully. To be honest, D-Matrix team is one of the few teams in the business that have built a multi-billion-dollar semiconductor business in the past, right? So this is a team that when they, in their past lives, we were at a company called Inphi, which was sold to Marvell, and we built a $3 billion business from scratch, competing with some of the very large incumbents, right? So we have what it takes. We have the DNA to compete. We are certainly not saying we are out to displace NVIDIA completely. That's not our goal. Our goal is to really coexist with them in areas where they don't necessarily do very well, right? And this is going to be such a big opportunity that I think there's going to be, it's not really a zero-sum game.
Great. Well, Sid, thank you for coming on the show. Congratulations on the funding round, and we'll have you back on the show again soon.
Look forward to it, Akash. Thank you for having me.
Okay. Shares of Grindr are tracking to end the year in the red. And the months-long slide is one reason two investors who collectively own 60% of the publicly traded company are trying to take the company private. My colleague Cory Weinberg, our Deputy Bureau Chief of Finance, wrote a great feature story on the company that is out today, and I want to bring him on to talk all about it. Cory, welcome back to the show. It's great to have you here.
Good morning, Akash. Great to be here. Glad to be talking about the real companies that matter in the tech world, Grindr.
I was going to say, we've really covered a lot of land on this episode so far. We talking about agents and with the former CEO of Twitter. Then we're talking about chips. Now we're talking about Grindr. We're going to talk autonomous vehicles. It's really a full tour of the tech sector is what I like to call it. Let's talk about the story that you wrote. Oftentimes we start these segments with the news. I want to take a step back a bit. Walk us through the history of Grindr, how they actually got to this point where you have these two folks that are trying to take them private.
Yeah, it's a really, I think, the most fascinating corporate history in tech, if I can go out on a limb. This was a company that launched in 2008 at the dawn of the iPhone, really one of the first apps that really took advantage of geolocation services. And the founder, who never raised venture capital, wanted to use it to find guys to hook up with. He was a gay guy in West Hollywood and really wanted to use the app to build the app to solve a personal problem for him. He grew it into a global phenomenon and sold it for hundreds of millions of dollars around the middle of last decade to a Chinese gaming company called Kunlun. That sale was ordered divested several years later by the US government. The largest or the most significant divestiture ordered in tech. And stay with me here. It was then picked up by a couple investors that not that many people had really heard of that much. A gentleman who used to work at Farallon Capital and Goldman Sachs named Raymond Zage, and another investor named James Liu. They bought it, ended up taking it public via a SPAC, and here we are today.
And before we get to its life as a public company, why was it ordered to divest?
Well, it was owned by a Chinese company who had access to a lot of sensitive personal data of U.S. citizens. If you think about sort of how people use Grindr, it's used for dating, it's used for hooking up. People have, sort of their have some sensitive material in the app, so it was viewed as a national security threat.
So it goes public. Talk to me about how the financials have fared over its lifetime as a public company and how the stock price has done.
So Grindr is a quietly strong performer, which might surprise you. It has 30-ish% EBITDA margins. Its revenue growth is in sort of the 30% range. It mostly sells subscriptions for premium features for the app. We'll do about $430 million in sales this year. So, not the biggest tech company that we're used to talking about or covering, but a fairly strong performer. And particularly for a lot of earlier this year, it was lapping the other dating app companies like Match and Match Group, which owns Tinder, and Bumble. And Grindr had been talking a lot about itself recently as it's not a dating app. Think about it as a social media app. This is an app. This is an app that where members are. I think the CEO likes to say that people are sending more messages in this app every day than WhatsApp. People are spending over 67 minutes a day in this app. It's not a dating app. It's a social media app.
Attention economy right there. There you go.
If people are paying attention to something on this app. The problem was around the middle of the year, there was a short report. Short sellers started to think, hey, this thing is actually a little overvalued. It's running up too much. User growth slowed down slightly. And the stock, for various reasons, has sort of been more on its way down, but it's sort of settled around about a $2.5 billion valuation.
So how is the company now thinking about this buyout offer? Are they receptive to it, do you think? Are they thinking more about the customers and the shareholders? Walk me through a little bit of the framework that you think they're going through in the boardroom right now.
Yeah, I mean, I think the offer brought by the two controlling shareholders, it's being assessed by an independent special committee of the board. Not by the people making the offer, not by management. It is sort of going to be deemed a question of, is this best for the rest of the shareholders? Is this price fair? It's about a 25% premium to where Grindr is currently trading. It's below where it was trading at its peak. So, those are that special committee is going to have to assess,
Right.
exactly, is this going to be the best deal for shareholders? How do we think, sort of this compares to Grindr's management's projections of the future, things
Right.
like that. So we don't know how they're going to decide yet on that. The tension, though, is this is what I reported the CEO, George Erickson, had sort of told the company in the days following that the bid became public. They think there's benefits to being a public company. A lot of employees and executives are paid in public company stock. And Grindr would, because of its history as being this sensitive, sort of national security, sort of important app, sees the value in being public and having to report quarterly, sort of provide that kind of transparency. And I think there's questions on, okay, this kind of a deal would add a ton of debt to this company's balance sheet because it would be a leveraged buyout. So what is that going to look like? So those are some of the pressure points, I think, in this deal. And we'll have to see how the board kind of rules in the coming weeks.
I wonder, just quickly before I let you go, you've studied a number of companies like this in great detail, studying their history, their journey to becoming a public company, the things they have to deal with as a public company. When you look at Grindr's story, broadly speaking, I wonder if there are any lessons for management or any broader reflections on just the way tech has evolved or how companies have to fare with going public. Do you have any sort of reflections on what other managers could learn from their story?
No, yeah, it's a really good question. I mean, Grindr is a case study in a few different things. One is it illustrates how strong a network effect really is, and how once you have a network of users who are hooked on the app and its features, it's really hard to lose it. I mean, like this company has been through all of this corporate turmoil in terms of the company changing hands time and time again. It was at various I also reported in this story on various issues the company has had with spam and dealing with kind of that side of the app. To me, like, one amazing thing of the Grindr story is how they have remained dominant despite, almost like in spite of itself sometimes. I think right now I can sort of see both sides of the debate. I can see the controlling shareholders side perspective, wanting to take it private. It's tough being a relatively small cap, a public company. It's hard to get the attention of investors. They took it public via SPAC, which makes it even harder to do that. So maybe I can see that benefit. At the same time, it's like, look, I mean, I do think there are a lot of Grindr users out there who probably get some comfort on a privacy perspective that this company does have to report quarter after quarter. So, yeah, it'll be interesting to see how it unfolds.
Great. Well, Cory, thanks for coming on. It was a great story, and we will make sure to link it in our show notes. It is our feature story this weekend. That is Cory Weinberg, our Deputy Bureau Chief of Finance here at The Information. Okay. Today, we are launching a brand new segment on TITV. It is called The Editor's Cut. Each week, a rotating group of senior editors from The Information will join me to take you inside our newsroom to give you a look at how we talk about the biggest tech stories, how we debate what really matters, how we figure out the smartest questions to ask next. This first topic sparked a lively discussion in our editorial meeting earlier this week. Waymo just began offering robotaxi rides on freeways in San Francisco, Los Angeles, and Phoenix. Joining me now to discuss that and discuss how we're thinking about it are our features editor, Nick Wingfield, and our finance editor, Ken Brown. Ken and Nick, welcome to the Editor's Cut and welcome to TITV. It's great to have you here.
Thank you. We're making history.
We are making history, the inaugural Editor's Cut. I'm excited for this one. Look, Nick, I'll start with you. We saw the news this week about Waymo. You've been following this sector for years, decades now, maybe even. How did this news square with the way that you're thinking about the autonomous vehicle sector at large, and what sort of reflections have you had?
The way I think about the Waymo story, I mean, this is a company that's been around for 15 years, basically grew up inside of Google, now Alphabet. I think of this from a sort of editor perspective in three buckets. There's the business story, there's the technology story, and then there's a cultural story. And all of them are fascinating. And our discussion earlier this week was prompted by the fact that Waymo, in one of its original markets in the Bay Area, is expanding to freeway service, finally, after all these years. They've been working on city streets in San Francisco and elsewhere. And now this just opens up a ton of new possibilities in the Bay Area, also Los Angeles.
Right.
Anybody who's driven in LA understands that it's a city of freeways. So this has business implications, it has safety implications, and it has some very interesting cultural implications that we can talk about.
Right.
But and Phoenix also is the other area where they're expanding. So and then next year, they're planning on expanding to a lot of new markets. So we're going to see the Waymo story kind of really jump in terms of its visibility in the public consciousness.
So can Nick outline for us a couple of different ways in which this is going to impact the world? The business angle, technology angle, the cultural angle, there's the safety angle. Which of those angles do you think people aren't talking about enough that you've really been thinking about?
I think the cultural angle is amazing. There's a stat, in San Francisco, they're all over the place, right? You see Waymos everywhere in the city. And the churn on them is very high, meaning people take one or two rides and don't take another ride, which looks kind of odd, except what they've realized is every tourist who comes to San Francisco takes a Waymo. It's like a ride that you take when you're in San Francisco, like a cable car.
Have you taken one?
I did exactly that, and I videoed it and I shared it with my family. I was a total tourist, but it is. So I live in New York, and so we don't have them yet. But I think people love these things. I think it is. People talk about them. People look at them when they drive by because you can see all the tourists in San Francisco all the time. I think it's an exciting technology that people think is really cool, and that I don't think that in all the projections I was reading, projections of the growth of sort of the next few years and how it's going to be still single digits penetration in the markets for the next few years, and I don't know if that's right.
You don't know if that's right in terms of how do you think it might go differently?
More, as soon as it lands in a city, it'll be embraced, and the real constraint is going to be the number of cars they can put on the road.
Nick, how does this compare with how people were thinking about it 10, 12 years ago? Was this faster or slower than the estimates may have been back then?
I think it's been slower. I mean, I joined the information, I think 7 years ago, and we were very early on in our coverage of the autonomous vehicle sector, including ride-hailing services like Waymo. And it really did not seem at that point like there were a lot of startups, right? And there was a lot of capital going into the sector, but there was still an incredible amount of skepticism about whether the Waymos of the world could achieve this, the kind of levels of safety required to launch these different services. And so it's really kind of, under our very noses has emerged as this very normal thing to do in places like San Francisco. And, my view is that when, they're testing in New York with human drivers right now, just sort of mapping, not taking passengers, but when it lands in places like New York, that it will become even more normal and just an inescapable part of kind of city life.
So Ken, I and Nick, you've taken one, right? You're on the West Coast. Yeah, you must have. So I seem to be the only one who hasn't taken one yet. Okay, and I'm feeling a bit left out. But I will say, as somebody who hasn't taken one, I mean, gosh, you could tell me it's safer. I don't know if I believe it. Ken, is there not going to be? I mean, I know you're talking about the cultural angle here, but you don't think there's any convincing to do of people saying like, "Hey, this is the future"?
Well, yeah, of course. I mean, I know I've talked to people who say I would never do that, but they're safe. I mean, they're better. At least what we've seen so far is, by and large, they're better drivers than people.
Mhm.
I mean, to take us into the most boring realm. I mean, there's a whole discussion in the world of car insurance about how it's going to lower insurance costs because they get in many fewer accidents. So, I mean, and when you sit in the front seat of one of them and you see the cameras and you see what the car is seeing, you realize that the car really does see everything.
Right.
And they
Right.
see the cyclist, they see the traffic light, they see whatever. And you realize how much you may not see as a driver. So I don't know. I think people will be convinced.
So, Nick, let's take this into the realm of put our reporting editors and journalism hats on here. I wonder what the big questions are for you as you think about this technology, and maybe the best way to think about that is all the different players that are involved. We obviously have Tesla that has grand ambitions in this realm. Waymo is a little bit further ahead. As you think about the reporting questions for journalists and for our newsroom, what do you think are the big questions that still have to be answered?
Well, I have some news to drop here. You want me to tell you?
Okay, let's go there.
All right. So one of the big questions is in the announcement from Waymo this week, it's going to San Jose Airport, which is crucial, for people down the peninsula and the Bay Area. It was not announced that it was going to go to San Francisco Airport or that it was launching there. They've already talked about the fact that they're testing it in San Francisco Airport. So I reached out to San Francisco Airport, and they said in the next few days, the airport is planning to approve phase 2 of Waymo testing, which goes from having a human driver in the Waymos into having a autonomous a driver, a self-driving vehicle, with not with the public as passengers, but with, I think, Waymo employees and SFO employees. So, and then eventually phase 3 is, full-blown commercial service. So by next week, it sounds like we're going to start to see Waymos that are actually taking, passengers of a sort, just not public passengers. So, getting people to the airport is going to be crucial. I mean, that's it's important for a variety of reasons. That's that from a business perspective, the gross dollars of an airport trip are much higher. I'm not so sure about the profit margins because there are a lot of fees associated with airports in and out of them. But certainly, I mean, to anyone who's taken an Uber to JFK or something like that in New York, these are $100+ rides very often. So so that's going to be really important to see it go into places like that. And then I'll just say on the cultural discussion that we were having before, I am really fascinated to see how people just start to use this in their daily lives. There was a tweet that kind of went viral this week where someone was raising the possibility of effectively Waymo hotels, which is the concept of you can hop into a Waymo and drive it down, have it drive you down the peninsula and take a nap in the back seat of it.
There you go.
Or so, or get your work done or whatever, and be in solitude in this car. And whether or not that happens, we'll have to see. But I think the possibilities here are kind of fun to imagine.
Ken, so talk about the Tesla component here, because you edit The Electric, which is Steve Levine's newsletter, and Tesla has had grand ambitions here. What sort of questions are you thinking about here with respect to the competitive dynamics?
Well, I mean, I think they're way behind. I mean, the rollout is still slow. They're still not taking, doing commercial service in Austin, where they've talked about it, and they're still limited. They're limited by the geography where they can go, where they're gonna drive. I mean, I think and frankly, the pressure on Tesla and on Elon Musk is very high. So, I mean, I think they have to get it together. I mean, their technology is different. They're not using LiDAR, and that is Musk says he's right, but
it's a bet. It's certainly a bet.
Yeah, everyone else is doing it differently. So so I mean, I think they're just under a lot of pressure, and the question for them is safety too. If they have safety problems, it's really going to set them, and they've had them. it's really going to set them back. And Waymo's, track record since it's been, taking passengers has been pretty good. So, I mean, very good. So I think that gap is really serious.
Right. Great. Well, I want to thank you both for coming on. It's always great to get folks on the show who have been studying this space in the context of the broader technology story at large. And so thank you to you both for inaugurating us for the first Editor's Cut. We'll have you back again on soon. That is Nick Wingfield, our features editor, and Ken Brown, our finance editor here at The Information. Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show on Monday. Have a great weekend. Bye-bye for now.